okay, has two parts. So the other cost has two parts. One is the fixed cost. Okay, I have some fixed cost plus variable cost. So the fixed cost is 50,000 he has given, plus the variable cost is going to be some r times, okay, I don't know the thing, and it is going to vary with the output produced, so 500 tons. Okay, so 500 tons, and that is going to be equal to 65 500. Okay, so but you can include both fixed and variable costs. Okay, it is going to, the other costs include excluding depreciation is going to be 65, so you need not calculate, but I'm just explaining what does this mean. So it is this is what is the fixed cost plus variable cost component says. So the other costs are going to be, because I need the total anyway, so it is 65 500. Okay, is the other cost. So with that, let's calculate the total production cost. So 22,500. So it's going to be 22,500 plus 75,000 plus 17,000 plus 65,500. That's going to be equal to 180,000 pounds. Okay, and the annual output, I know it is 500 tons, so let me write that. Okay, so my production cost is going to be 180,000 divided by 500 tons. That's going to be 360. So my production cost per ton is going to be 360 pounds. Okay, so that is for the existing machinery. Now for the new machinery we have to do, so let's do that same thing and see how much it happens for the new machinery. Okay, what is the raw material cost? So the raw material cost for this is going to be 45 pounds for 800. So 800 times 800, 45 is a cost, okay, times 800. So that value is going to be equal to 36,000. So let's write that. So it's going to be 36,000. Then you have the production wages. Okay, production wages have been mentioned as, see, the production wages, the existing machinery requires a team of 6 members. The new machinery would require a team of 8 workers paid at the same rate. So for production wages, we saw that the rate, so we had to calculate what is the production wage rate for, what is the wage rate, okay, for existing machinery. So that's going to be equal to the total amount paid per year. Okay, this was what it was paid, divided by how many people were there. There was a team of 6 members, so let's write that. So that is equal to, so 75,000 divided by 6 people. So they were paid at the rate of 12,500. Now wage, so now what is the production wage? Okay, the total production wage, okay, for 8 people. So that's going to be equal to, he says that he needs a team of 8 workers. So 8 times 12,500, that's going to be equal to 100,000. So that's the production wage we have to pay. So let's write that. Then we have the depreciation cost. I've already mentioned the formula for depreciation cost. Okay, the depreciation cost we calculated, it was cost minus residual divided by useful economic life. Here it will be 125,000 minus 5,000 by 8 years. So let's write that. So 125,000 minus 5,000 divided by 8 years. So the value is going to be equal to 125 minus 5. So the value is going to be 15,000. So let's write that. Okay, that's the annual depreciation cost for the new machinery. Next one, we have the other costs. Other costs, it says that, see the note below. Other costs excluding depreciation contains a fixed cost of 50,000 plus the variable cost. So here we will need this rate at which the variable cost is changing. So I had already written the formula for this. Other cost is equal to fixed cost plus variable cost. So the fixed component cost was 50,000, and if the output was 500, I don't know at what rate it was doing, but we know the total other cost was 65,000 for the existing machinery. So let's calculate R from this, equal to 65,500 minus 50,000, okay, divided by 500. So it is like you take the 50,000 to the other side and you divide it by 500. That is equal to 31. Okay, so that 31 was the rate of change with the variable output. Now for the new machinery, we have to calculate at this rate. So what is the other cost going to be for the new machinery? Cost for the new machinery is going to be the fixed cost. First, the fixed component doesn't change, 50,000 plus R is 31 this time, and the output is going to be 800, right? So the output is going to be 800. So what is the value? 50,000 plus 31 times 800, that is 74,800. So the other costs, okay, the other cost for the new machinery will become now equal to 74,800. Now let's calculate the total production cost for the new machinery. So if I add 36,000 plus 100,000 plus 15,000 plus 74,800, that value will be 225,800. That's the total production cost. And per ton, the the annual output is 800 tons. So divided by 800, that is 282.282.25. So that's the production cost. So the production cost for the new machinery, for the existing machinery, production cost was, okay, production cost for 1 ton of the plastic waste using existing machinery, okay, it's going to be equal to 360 pounds. Okay, it was 360 pounds. And the production cost for the new machinery, okay, for using the new machinery for 1 ton of plastic waste, okay, that is going to be equal to 282.282